The real promise of these AI agents is legacy software, even with automation, still requires a lot of human management. Our goal and where we see the market heading is the finance team. They upskill or they elevate from operators to architects.
Welcome back to CFO Weekly, where we're talking with financial leaders about how to build efficiency in their teams, create time for strategy, and ultimately get results. This podcast is brought to you by Personiv, the trusted leader in finance and accounting outsourcing for over 30 years. See how Personiv's customized solutions can help you streamline your operations with teams that start as small as one. Visit the website at personiv.com to learn more. I'm your host, Megan Weis. Let's jump right in. Welcome back to CFO Weekly. Today I'm joined by Jared Shulman, co-founder and CEO of Daylit, a fast-growing fintech platform bringing AI agents to accounts receivable and working capital management. Daylit helps businesses automate collections, resolve disputes, predict cash flow, and unlock financing through a smarter, more connected receivables platform. The company recently secured $110 million in equity and debt funding to accelerate its growth and expand its AI capabilities. In this episode, we'll unpack the SaaS reckoning in finance, why finance leaders should consider pausing certain SaaS purchases and invest in building their team's AI fluency. Welcome to the show, Jared.
Thanks so much for having me.
So, when you look back at the beginning of your career, was there a specific experience that first showed you how much inefficiency in receivables and cash flow can hold a business back?
Yes, there was, but with your permission, I'll tell a different story that I think maybe will help sort of lead into our main discussion around like this AI wave, and we'll pick up some of the inefficiencies in cash flow and receivables along the way. So, because we're kind of at this turning point, at least this is the way that we see the world and our customers that we talk to see the world, where this AI wave is really changing the way that people are working. And you talk about the beginning of my career and the question, I go back to my first job out of school. My background is I grew up in kind of the hedge fund space. I'm a CFA charterholder and worked at various hedge funds, much of them in the credit space, underwriting, accounts receivable portfolios. But my first job out of college, I was an equity trader, and I'll never forget, it was this turning point in my career. I went to this prime broker. He brought us up to his office. He was trying to show off how impressive his firm was. It was a top floor, huge building in Manhattan. And we got there, and it was a football field full of empty desks, Bloomberg terminals. There's basically like two people there, and everyone had been laid off and basically replaced with algorithmic traders. It was like the turning point of, in the equity space where the markets were starting to get way more efficient. And so I bring that up not to scare anyone, but we kind of see like there's this big turning point that's happening today. It's happening really quickly, where work that used to be done sort of like on a manual or management adjusted basis or management basis is now happening through technology. And so we can talk about today what's happening in cash flow receivables, accounts receivable teams. But it was, for better or worse, very early in my career that I saw just how quickly technology can change. And so in my case, I went onto YouTube and taught myself how to write Python scripts. And that's kind of what brought me here today. But there's a lot of ways to sort of keep up with what's happening and prepare for it. And so it's a really fascinating and kind of interesting time to be in the market in the seat of any sort of finance professional.
Yeah, it really is. I think it's very exciting what's ahead for finance and accounting. Maybe a little scary too, but mostly exciting.
It can be scary. I mean, I think it's natural. I was just at this conference last week, and I'm overhearing kind of the murmurs of the crowd and talking to people. And some people are like, hey, I got 5 years left to retirement. Do I really have to learn this AI thing? And the consensus was, hey, in 5 years, like so much can change. 5 years, talk about 5 months. And so I think people are really at this point in their career kind of weighing like, where am I? Should I learn it? And the consensus is it's really time to lean in, really time to learn. And by the way, learning how to become fluent in AI, which is something that we spend a lot of time talking about, is a lot more accessible than I think a lot of people realize.
So let's talk about that. Like, how would
Totally.
you go about that, becoming fluent in AI?
Yeah, if only, back in the day, at least for me, maybe I'm dating myself a bit, but there was a Rosetta Stone, right? So I don't know if Rosetta Stone is putting out an AI course. They probably should. That'd be another company pivoting to AI. But maybe just for starters, we can talk a little bit about how we see the world in terms of like AI purchasing today for the suite of the CFO. Again, we're here to talk about this transformation that's happening in the CFO suite from the CFO all the way down to administrative workers, staff accountants, people that are handling the day to day. And when we look at what's happening in the market, we think that there's this, we call it this triple spend or this 3x spend on AI right now. So when we think about this like triple spend, what we mean by that is today, finance teams, they have their existing stack of legacy software. They have their ERP, they have all of these add-ons on top of it. They have workflow specific tools that maybe are, bespoke to them or, have been installed on top of the ERP through an implementation team. And what's happening is they're feeling this big urge to go out and purchase AI to kind of keep up with the trend or get ahead of the trend. And so we consider that like the second purchase. So you have your spend on legacy software and then you're bolting on this AI. But there's this hidden third X, this third time cost, which is this idea of like implementation and deployment. And what I mean by that is, if you look at where a lot of these big labs, these AI labs are spending their time, it's working with companies like Deloitte, like Accenture, as professional services to come in and basically install the software, upskill the workforce on how to use the software. And so you have this, again, we call it this triple spend that's happening anytime someone goes, and I should say many of the times when people go and buy AI software, they're getting hit three times. They're paying for the legacy software and then they're bolting on AI and they have to go and train their staff on how to use it. And our vision or where we see the world heading is to reduce two of those three spends by really spending the time and encouraging your team, again, to become fluent in AI. We can talk a little bit more about what fluency means, but our belief is that by becoming fluent in AI, of course, you can start to implement these agents, but most importantly, you can start to reduce the spend on your legacy software, replacing that with just some natural, we call them like AI skills using things like Claude Cowork or Claude Code. So building some of these bespoke legacy softwares yourself and going directly to what we call the good stuff, going directly to these AI agents. So you're not building on top of this old school sort of like legacy software. And so that's really what we think about when we talk about AI fluency is reducing that triple spend and going directly to the good stuff, directly to the AI agents.
So, talk to me a little bit about Daylit. What is it that you guys do and how did it come to be?
So Daylit's been around for about 5 years now. We've helped 1,000+ customers with their accounts receivable. The business got started as a AI factoring and credit company. And so our customers would come to us looking for liquidity on their accounts receivable or looking for help on credit. So understanding the risks of their buyers. And we ran that business successfully for a few years. And about 24 months ago, our customers started to come to us with some pain around collections. And this was large manufacturers, distributors, professional services companies, even tech platforms that are selling B2B and need to staff up a really big team just to get paid on time. Something like 50% of invoices are paid late. And so we built them a small AI tool. This is, again, year and a half or so ago, just to help them get a little bit more scale out of their collections team. And they really liked it. And so we, spent a little bit more time on it. Small little beta group grew into, real paying customers. And about 12 months ago, we announced we raised $110 million from some of the top fintech and AI VCs in the country.
Congratulations. That's
Thank
awesome.
you. And so today we're considered the leading AI agents for accounts receivable platform Our AI agents have been, trained and looked at, over $100 billion worth of, AR. And we believe they're the preeminent specialized agents to help customers manage their accounts receivable. And so when we talk about going directly to the good stuff, directly to the agents, we believe the future will be in the finance stack, again, becoming fluent in AI and being able to coordinate your systems around these specialized agents, like Daylit for AR as an example.
So, if you had to design a financial stack today for a mid market company with AI fluency as the goal, what kind of tools would you keep in that stack and what wouldn't be there?
So I guess for starters, we need to start with our system of record. This is a space that we're watching really carefully. There are the new, we would call them like AI forward or AI native ERPs like Rillet and Campfire. I would say that if you're a business that has limited complexity, I think for a SaaS based business or professional services, this is a really great place to start because this is like, you can think of it as like the future of ERP, these Campfire and Rillets. As you become a little bit more complex, of course, these like SaaS-based leader ERPs, named just a few, NetSuite, QuickBooks has a new enterprise ERP, Sage, Acumatica. These are another good example, but you want to start with your system of record. And then on top of that, what we typically see customers begin when they think about automation is AP and AR. And so it's not too uncommon for us to see a customer use Ramp on their accounts payable side. And then we're always delighted when we see on the accounts receivable side, Daylit is the selection. But, of course, in both buckets, there are, a few other vendors. And so that's like what we see as like a typical first step. If you're a mid-market business, you're thinking about your ERP, your system of record, and then you're going to automate things in the accounts payable, accounts receivable. Those are two like really good cost centers that you want to address first and foremost. And then you can start to think about things around the FP&A function, higher order items, and there's plenty of vendors there as well.
So, with all the technology that's available, I mean, when you're interacting with your customers, how much of a typical finance team's workflow is still manual, do you find, despite all of these tools being available? And why is that?
Yeah. So I think the why is a really interesting part of the answer. So I would say 9.9 out of 10 times, there are still many of these workflows that are manual. There's, of course, automation built within, but the real promise of these AI agents, and again, we go back to reducing this triple cost. We want to go directly to the good stuff, directly to the agents, is legacy software, even with automation, still requires a lot of human management. There's a lot of workflows that require things like monitoring or tagging or approvals. Of course, those are all important, but with the use of AI agents, our goal and where we see the market heading, especially for the finance team, is they upskill or they elevate from operators to architects. And so what that means is instead of going through and approving every invoice or tagging every account, is this a promise to pay? Is this a dispute? Is to spend the time as an architect and think about the policies that you want to administer for your organization. So if these invoices look like this, auto approve. If these accounts behave in a certain manner, let's auto tag and execute a plan against that. And so when we think about like legacy SaaS, when I say that, I mean like the old school kind of traditional software businesses, much of their workflow is around helping human operator do some automation, but still spend the time to actually click around last mile. And I think what's exciting about these AI agents is they're promising to deliver an outcome. And we really like to see customers that are thinking about not spending their time last mile, but rather spending their time architecting the system that can go and deliver that.
And when you're talking to finance leaders, what's the biggest misconception you find that they have about AI?
I think it's probably rightfully so that the first thing that always comes up is this idea of hallucination. And I think that, at least what I've seen has happened is The world of AI has just been moving so quickly. And I don't want to discredit hallucination because obviously it still exists to a certain extent. But I feel like a lot of the customers that I talk to that, start off as, naysayers and eventually convert to customers, they're anchoring to, let's call it Chat GPT 1.0 or 2.0, where the great meme is the Will Smith eating spaghetti. I don't know if you've ever seen that, but this was kind of the litmus test for the efficacy or the quality of AI. And when you see the first version of the spaghetti meme, it's very low quality. So I wouldn't want this something of this caliber to go anywhere near my customers. But today, I mean, it's straight out of a movie. And so I think that's probably like the first big bucket is there's this anchor to a much earlier version of the models that was probably a real concern then, but today it's no longer a concern. And then the second thing is really around security, which again is rightfully so.
Yeah.
People, especially finance teams, we sell to customers in the legal profession, healthcare services, and so even banks. And so the customer data is just so valuable. And in the accounts receivable side, where we're looking at details around your customers, security is the most important thing. And so I think that those are the two check marks that any company needs to focus on is how can you provide evidence that, hey, we've thought about this idea of letting the agents just run wild and have guardrails in place for quality. And then, of course, guardrails for security are critical.
That's a term I hear a lot from CFOs, guardrails. And like,
Yes.
what are you going to do if it jumps out of the box and decides to just do what it wants to
Right.
do?
Right.
So this idea of headless finance, what exactly is it?
Well, I think that it sort of stems from the team over at Salesforce a couple weeks ago came out with this idea of like a headless CRM. And they asked this really powerful question, which is, what if you never had to log in to your CRM ever again? And I think it took a lot of people by shock. The obvious response is to dismiss it. I always want to see what's happening with my customers. I want to be able to track my dashboards, track my metrics. But when you start to like peel back the onion a little bit, I'm going to talk about the CRM for a second. I mean, you start to realize that so much of what we do with the CRM is this idea of ingesting data and posting data or tagging data. And how much of that can just happen in a headless manner? Anytime we send an email, of course, it goes into the CRM, but it requires some review. It requires some layer of judgment, some rules, and again, that are architected. Sometimes we would think of it by our revenue operations team. And then when it comes to the output, ultimately our goal is just to drive more revenue, find more customers similar to the customers that we've already sold to, being able to put in follow-up reminders to go and reach out or even send those reminders themselves. And so when you sort of peel back what it means to really be headless, you recognize that a lot of that dashboardification of legacy software is really just there so that we, the operator, can follow up on, an SOP or some sort of rule book that the organization has created. And so when we think about this idea of headless finance, specific to the accounts receivable team, you can apply that same level of logic. What if an accounts receivables team never had to log in to, I'm going to just call it legacy SaaS. You could think of it as like, High Radius or a Bill Trust or one of these tools. But what if they never had to log into that again? What if they were managing the AR agents or the AI agents for accounts receivable the same way that they were managing someone who is just doing the day-to-day collections against this rule book, and the rule book is the source of truth as opposed to the dashboard. And so that's really what we mean. Again, like we believe the future of software, the future of purchasing in the CFO suite is trying to get as close to the AI agents to deliver the outcome as possible. And we think in the future, it's managing not just humans, but the actual AI agents. And that doesn't necessarily require a dashboard.
And you've said that you can reduce AR costs by up to 75%. So where is that efficiency actually coming from? Is it just 75% less heads that need to do AR, or where does that come from?
So the costs per accounts receivable are really threefold. So the first is, and this is like the biggest one, is just this cost of borrowing or this cost of your DSO. So anytime you have money outstanding, there's this cost against your own, whack. So you can think of it as something like, for many companies, between 10 and 15%. And so just by being able to reduce your DSO, in many cases we reduce it by like 15, 20 days, you're pulling in cash faster and it's money that can be reinvested back into the business. And so this kind of hanging cost of accounts receivable gets dropped immensely. The second piece is around the cost of debt, bad debt. And so most people are writing off anywhere between like 20 and 50 basis points of their revenue every year. And a lot of that is just in the long tail. So you have maybe 1,000 customers, but you're really only able to spend time really focusing on the top 20% of those customers. And, every year, that 20 to 50 basis points of revenue and that 80%, the 800 customers, you can't spend much time. They just sort of slip through the cracks. And so we help make sure that that doesn't happen. And then the last piece is we spend a lot of time talking about the CFO hierarchy, where they're spending their budget. We believe that the future with AI turns the suite of the CFO from what's traditionally been a cost center to like value creation, like a revenue or value driver. And so much of the cost in like actual final mile collections, a lot of times it's overseas or it's people that frankly want to and can be doing more valuable work, but just need to get the job done to collect. Those can be redeployed towards like higher value items, like things supporting an FP&A function, things supporting staff accountants, and this can be redeployed. And so that really frees up budget and takes away, again, what is like a really burdensome cost in accounts receivable.
And you teach the next generation of finance leaders at Babson College, correct?
Let's hope so. Yes. These Babson kids are incredibly smart. And so that's been a lot of fun. It's a great school.
So how are you preparing them for the future?
It's funny. So I've been teaching for last 5 or 6 years. I say that I, do it for them. I do it for me. I just selfishly, I love doing it. And hopefully they get something out of it. But when AI was first sort of like coming out, there was naturally a lot of concern. And it was a different conversation than it is today. I wasn't really sure what my posture was on, what this is going to mean today. And I think Babson, which is this great school known for entrepreneurship, I let the students know this is maybe the greatest time in history to graduate college. And especially if you have this entrepreneurial go-getter mindset. I teach this course called Intro to Vibe Coding with Lovable as the backdrop. And what is so amazing, and I think that kids today or students today should really take advantage of it, is it has become the barrier to build a business or to create something is lower than it ever has before. If you look at Stripe, they're growing, this is a company that's been around for 10, 15 years. They're growing at the highest rate that they've ever been. Businesses are getting started every single day. And so I really encourage students to always do two things in a class. One is embrace AI, spend as much time as possible in your free time, have this builder mentality because companies will hire for that. And two, and this is sort of free advice to anyone who's listening, is if you're in college, spend your spring break in San Francisco and go to all the events and all of the parties and just soak in what is like effectively the center of the universe for AI. The Caribbean will always be there. You can go there when you're rich and successful from your exit. But right now is like a critical time to go and get really deep into like what is happening, again, center of the universe in AI. So that's always the advice that I try to leave the students with.
Great advice. I hear people a lot of times wondering if AI is taking away those entry-level jobs from the younger generation and where they're ever going to start if those entry-level jobs are gone. Do you worry about that at all, or no, not really? You think it's just evolving the traditional landscape and they'll find jobs doing other stuff?
I'm a firm believer that AI is just going to be good for society. And maybe I should qualify that just because there will be, with any good thing, there's obviously downside and risk. But I look at from my perspective, I mean, we're actively hiring right now. We're looking for people of all ages, of all skill sets. I should say of all ages, of specific skill sets. We want people who are hungry to build. And, I talk to my friends who, have businesses themselves. They're thinking the same thing. They want people who are able and ready to roll up their sleeves, work really hard, and go and build something. I think I saw, or listened in one of your previous podcasts. I forget who it was. Maybe it was Patrick from Blackline, but talking about this idea of like the generalist. And so I think that that's like the power of what AI is really creating or enabling is, people can come in as a generalist and you can have maybe taken a couple of finance courses and you're not going to be a controller right off the bat, but you can enter these finance orgs and start building reporting tools or start slicing the data and analyzing data in a much more advanced way than probably exists in their day-to-day software. And so I think that it's like you got to work hard and you really have to lean in to the new technology. But I think that it's a very exciting time to be a recent grad, especially if you have that mindset.
And last question, but looking ahead, how do you see the role of the CFO evolving over the next 3 to 5 years, or maybe like the finance organization in general?
This is where I hope it heads. And maybe it'll take 3 years, maybe 5. But I'd love to see the suite of the CFO start to look a little bit more like a trading floor than, again, I think that if I were to talk to many CFOs, they'd be the first to admit that right now it sort of looks more like a cost center. So we really see AI as a chance to transition the suite of CFO from a cost center to a value driver of the org. And so what do I mean by, a trading floor? Well, if the CFO and their team's time is spent less on, basic reporting, administrative work like chasing invoices or paying bills, spent less of the time with budgeting, they can start to think more strategically. Okay, here's my access to capital. Here's my weighted cost of that capital. What does the landscape look like for acquisition or for expansion? Or how can we go and leverage our cost of capital for a new investment? In many businesses, there's lots of opportunities to hedge. I saw this great story in tracking the predictive markets a little bit, where people are using tools like OG.com and Kalshi, and they're using these tools to hedge inflation prices for inflation-linked wages. And so if you are spending all of your time in administrative work, how are you going to be able to think strategically or have the resources to be able to do really what is, I think, most exciting and what your role is as a CFO to be strategic? And so that, to me, the real promise of AI is to reduce, our mission statement is to eliminate the mundane. And so reduce that, put these AI agents in charge, architect the system, and then spend your time adding and driving value for the organization. And so that's where I see, at least I hope to see the suite of the CFO. And if we can be helpful, just taking care of that AR headache, maybe we've done our part.
Yeah, well, thank you, Jared, very much for being here today. This has been a great conversation.
Yeah, thanks so much for having me. It was a lot of fun, Megan.
Yeah, I like you. I think that it's a very exciting time to be in finance and accounting. So can't wait to see what we're talking about 3 years from now.
Let's check in 3 years, see if we were right.
All right. Well, thank you very much. And to all of our listeners, please tune in next week. And until then, take care.
Thank you for listening to this episode of CFO Weekly. We hope you picked up some useful insights and strategies to help move your business forward. If you enjoyed the conversation, be sure to subscribe on your favorite podcast platform so you never miss an episode. And if you found it valuable, we'd love for you to leave a review and share it with your network. It helps us bring even more great content to finance leaders like you. For more episodes, resources, and to see how Personiv can support your accounting and finance needs, visit Personiv.com. See you next week.